Hi, I'm Carrie Cook. I am a small business financial strategist. And for me, understanding money helps me work with my clients to help them make better choices for healthier business outcomes. It isn't just numbers for me. Today, we're going to talk about profit, profitable, and profitability, the differences in how we can increase and improve our bottom line for our own small businesses. You can read that, but basically, anyone not really understanding money growing up but knew of the scarcity in your hand, I was led to instant gratification after very long dry spells. I spent several years studying money in business, how it travels, how it expands, and how money helps to build or break down small businesses. I've watched plenty of small businesses successfully expand and also crumble to the ground. I understand profitability and what real profit can do for a small business, as well as the lack of it. I personally have experiences up and downs just like all of you. I grew up trying to figure out how money worked, childhood allowances, good girl money, followed by off to school, navigating all of that, graduation, getting a job, balancing that kind of income, getting married, buying a house, having kids, building a fence, a change in income brackets, getting divorced, change again on income brackets, picking myself up, dusting myself off, going back to school, getting an MBA, and then changing careers and starting over again. So when you look at it, I've merged and separated money, shifted finances, taken out home loans, taken out business loans, helped my extended family financially. I have won huge and I've lost so that there was nothing left. It all comes down to my relationship with money. So today I'm going to talk to you about profit and what really profit is in your business. When you ask an entrepreneur whether they are profitable or not, they say, yeah, oh yeah, I'm profitable. Profit means that you are bidding your jobs to cover the actual cost of getting the job off the ground, the cost of your time, and the cost of your overhead expenses. We want to make sure that when you're talking about profit, you actually understand what that means. It is completely the financial gain after deducting all of your costs and expenses and taxes. It's what's left after you have paid everything. The typical entrepreneur bidding process is when we start working, we say, I wonder how much I should charge. So you start to ask your friends or your network how much you should charge. And then you charge that. And as you progress through entrepreneurship, you start to figure out what you're comfortable charging. That's not enough money. I need to charge more. And you charge more successfully until you've hit that cap and you use that cap for a while. And then you decide that your value is increased and you decide to throw a dart and see what you think the market is tolerable for. It's not the way to do it. We want to make sure that we understand that we are building businesses and not hobbies. So we need to make sure that we are actually making a profit on each and every one of our bids. I'm going to show you a formula in just a second, but I think the important piece here is what what constitutes a business, what constitutes a hobby. These are specific IRS expectations for a business, with along with some other things, but this is very important for you to recognize and decide if this actually is identifies you. Signs that you might not be profitable. We have this thing called firefighting, where one day we're up, the next day we're down, next day we're up, next day we're down. That is not sustainable, and that is not good for the health of your business. What we want to do is have some consistency and some even flow through all of our financials in our business. What do we have to do to get there? First, I want to make sure that you recognize that you are not alone in this. Of all the businesses out there, it generally takes 2 to 3 years to become profitable. We need to get to profit because it's important for our self esteem. It's important for any employees that we have. It's important for all of the vendors that we work with. It's important for the business health and sustainability. So, profiting is the goal. How do we get there? This is a formula that I developed some time ago, and I've really been honing in on this for my clients. I call it the entrepreneur's formula for job profitability. And if you're brand new to entrepreneurship, you don't have a lot of information, but we would take the information that you have. If you've been around the block for a year or so, then we have some stable numbers to use to determine what this is. So, your annual fixed cost is what you're going to find on your profit and loss statement. If you don't know what your profit and loss statement is, we'll need to talk about that. Give me a call. We then divide that by the annual labor hours. And these are labor hours that may or may not have been paid by wage. We need to clarify that. But it would be the amount of hours that you work in a year. If you're working a 40-hour week, it's 2,088 hours. Within this bid, we are going to add your specific job costs. If you have to hire an additional person to, consult with, that's a specific job cost. And all of those things are going to equal your current project costs. That's what it's costing you to do work for Mary Jane. Now we are adding in the magic. And the magic is called the profit multiplier. Depending on what we want to earn for profit, will determine what this profit multiplier is. When we're brand new as entrepreneurs, I like to think of 10% and above as your multiplier. As we age into entrepreneurship, we're going to aim for 44% if you are a service-based organization, 26% if you are a product-based organization. So we're going to take that project cost and we're going to multiply it by this multiplier, and that's going to give us our current bid total. It's going to be big. You're going to look at it and you're going to say, oh, I don't necessarily need that. You do, because we're building a business. And that's an important aspect to keep in mind as you progress through your business. So by doing that, you have now become profitable on you have now had profit on one bid. If we do that over and over again, we become profitable. That means that we have enough money to cover all of our business expenses because we've done the math behind it. We are paying ourselves a market-based wage, and we are able to build savings and reinvestment accounts. This is very important. This means that you're profitable. If you can maintain being profitable month upon month upon month, then we move on to something called profitability. But we'll get there in a second. As I said earlier, a good profit margin for a service-based business is to start somewhere between 10 and 20% profit margin. We're going to work toward 44%, and that's a service-based business. For a product-based business, a good profit margin is somewhere between 5 and 18%, and I would work toward 26. There are ways of doing this based on lots of research, and it can be instituted in your own small business. Once we have profit per bid and we have become profitable, we're going to build a savings plan. There are 5 savings plans that I promote in my business. The first is a $20,000 contingency account. That $20,000 isn't touched unless there's a tornado that rips through your town and takes out your house or your business. If you live by an ocean that the land falls into the sea, you don't touch it. You just build it. Once you hit $20,000, that money allows you to make decisions that you couldn't make before you had that money. It opens up doors. It allows you to dream. It allows you to recognize the success of your own business. It's a very, very important fund to start and to build. The next thing we want to do is save some taxes. Taxing is based on our net profit. So if we sell $100,000 worth of product or services in a year and our net profit is 10,000, taxes are based on that 10,000. Depending on where you sit in the hierarchy of tax rates, we want to save that much money. If you are at $10,000, I would save 28%. So you're going to take your bids, the money that's left over, and we're going to take 28% of that money and we're going to put it into a savings account. We're going to save 16% into a reinvestment account. This is money that's going to go back into your business to help you build your business. This is going to buy new computers. This is going to buy new staffing. This is going to potentially build you a new entity. Our short-term savings are going to be 7.5%. And that short-term savings is going to be for unexpected situations. Something happens in the business and you need a short-term fund. There you go. Our long-term savings are going to be about 5 years out, thinking about what you want to do, how you want to build, what you want to create 5 years out. And again, that's 7.5%. We will talk about retirement shortly. So profitability means that you're taking all of the assets that you have in your business and you're utilizing them for the benefit of your business on a regular basis. If you have a printer, you're using that printer regularly until the printer dies. That's being profitable or having profitability. If you have a printer and you continually go to Office Max to print things, you are not using your asset. We want to make sure that you're using the things that you have purchased in your business for the longevity and productivity in your business. A highly profitable business is one that consistently generates significant amount of profit relative to its revenue and expenses while making the most of its current assets, which is what I just said. I want to make sure that as you look at your business, you are utilizing all of the things that you have financed in your business. So 3 formulas for measuring success. The first is gross margin percentage. We want to understand how much money you're making against your cost of goods sold. So when you sell something, you have $100,000 worth of sales, but it costs you money to create that $100,000 worth of sales. So what is that? That's called cost of goods sold. That includes cost of labor and any materials that it takes in order for you to build whatever you build to sell. So when you think of it like that, we're going to say 10%. Net sales, it had 10% is our cost of goods sold. So we're now down to $90,000 times 100 divided by our net sales. So our gross margin percentage seems to be about 90%, which is amazing. Yeah, 90%. Profit margin percentage is how much money that your sales have been that turned into profits. So it's sort of the same as covering your net cost of goods sold. It's your net income divided by your net sales. So net income is going to be what's left at the end of the year divided by how much sales you had. So it really shows you what it costs you to run your business. That's going to cover all of your expenses. When you do return on capital employed ratio, you're taking the earnings before interest and taxes and you're dividing that by assets minus liabilities. So that's current liabilities, total assets minus current liabilities. And that's going to be your return on capital employed. So ways to increase your profit. I strongly recommend beginning with a very strong accounting practice. We want to make sure that you are not using Excel, that you have somebody who's helping you, that you're handing that off to somebody who has the skill set to do it. You don't. You have a skill set to do something else. Give that job to somebody who knows what they're doing. Use percentage-based marketing or budgeting. Percentage-based budgeting is um, uh, you're taking your entire year's worth of information and you're putting that into percentages. And as you go through the following year, you're kind of basing your budget on what you spent the year before in percent. We can adjust the percentages. Um, we can adjust the percentages so that they're visual for you. 25% can become 24%, but $5 doesn't do 442 very well. So by looking at it in a percent wise, we are able to comprehend the information better to save money on our within our budgets. We're going to evaluate our operations for decreased spending. I have a habit of taking people to lunch. I take people to lunch every day, almost every day. And one of the things that I know about my business is that I have a huge budget on meals. I would like to be able to trim that down so that more money is in my pocket at the end of the year. Well, what will that take me for me to do that? I have to kind of evaluate. If I'm doing 4 lunches a week, maybe I do 2 lunches and 2 coffees. Just kind of have to figure out creatively how to decrease your spending. And then again, you have to evaluate your operations for increased sales. So we want to figure out ways to increase our sales. Holiday, fall festival, different types of sales, different types of promotion, being seen, doing conferences, being on a webinar, really pointing people to, hey, pay attention to me. In the day in life that we live in, that's really hard to do, but developing strong relationships with other entrepreneurs is a good way of getting additional work. We want to streamline your management costs. If you have somebody who's working for you full time, consider doing a fractional piece of help. Being able to minimize the amount of money you're putting out in getting your payroll prepared. And things like that. Just simple little pennies here, pennies there, and it makes a big difference. If you have if you have a workforce, you may want to consider making everyone a salesperson. Incentivize them to sell your product or your services. Revisit and reboot marketing. Marketing is evergreen. It always needs something. It can always benefit by additional things, and keeping it fresh helps to maintain people's attention to what you're all about. Maximize your cash flow. Figure out ways to maximize your cash flow. Get paid up front. Try and minimize the amount of money that comes through a processing service. Incentivize people to pay you cash. That's going to help you minimize your expenses. It's also going to help you with cash flow. And then consider hiring fractional or consultative help as you need it. So to clarify, profit is actual financial gain. Profitable is generating profit time and again. And profitability means using your assets to their full extent.